In this episode, we speak with Mitchell Green, the founder and managing partner at LeadEdge Capital, a growth equity firm with over $5 billion in assets under management. Investing in software, internet, and tech-enabled services businesses globally, the firm specializes in helping growth-stage companies scale. LeadEdge Capital has an interesting model that combines elements of private equity, growth, and an active network of over 700 limited partners to build a very powerful moat. Prior to founding LeadEdge, Mitchell was on the investment teams at Eastern Advisors and Bessemer Venture Partners. He is formerly a nationally ranked alpine ski racer. I'm your host, RJ Lumba. We hope you enjoy the show. If you like the episode, click to follow.
RJ Lumba is the managing partner of Growth Cap and the executive chairman of Market Insight Media. He is the host of Growth Investor, a podcast featuring today's best investors, executives, and founders. In the minutes ahead, we'll uncover insights and strategies for accelerating growth and succeeding in business.
Mitchell, thank you so much for taking the time to chat with us today. It's a delight to be with you.
Thanks so much for having me in, RJ.
So I think it's pretty apparent what your value add is to founders, because I watched videos on your website and they all say that LeadEdge has been tremendously helpful with introductions. You have an expansive network of industry leaders. And as I was scrolling through the list, I thought, wow, this is more than I've ever seen in terms of a network.
You mean it's actually insane?
It's like, insane. I was going to say, but I don't throw around those words on the podcast, but there's a first time for everything. So how did it start? Did you originally have a network, a core group, and then that just kind of ballooned?
Sure. Would you like me to give you like a 5-minute story background and how we got here?
Yeah.
So yeah, for sure. So I was from Grand Rapids, Michigan. I was a nationally ranked ski racer. Being a nationally ranked ski racer was the only reason I was able to get into Williams College. They skied D1, got to Williams. I'm like, I want to get paid. How am I going to make some money here and pay off student loans and stuff? So I ended up going to investment banking for a year. In other words, I was making PowerPoint presentations at 3 a.m. And after investment banking, I got a call from Bessemer Venture Partners. At the time, world-class venture fund. This is like 2004. They were only investing out of the Phipps family's fortune, and they wanted to hire, 22 some young guys, gals to go cold call companies. They had seen what firms like Insight, which had replicated what Summit and TA did, hired 22 to 24-year-olds to like pound the phones. They're like, why aren't we seeing these deals that Insight is doing? So they hired us, two knuckleheads, to get on the phone and cold call. So between like 05 to 07, Brian Nider and I, who's now one of my partners, left like 20,000 voicemails, sent 20,000 emails. That's in an era when people left voicemails. And like we have 20 associates now, and they don't appreciate it. Literally back then, you'd be like, you're the used car salesman on the phone calling the CEO, and they actually pick up the phone versus writing an email now, right? It's like, hey, I'm Bessemer Venture Partners. I'm like, we have all these world-class exits we've had. And when I was at Bessemer, when I took the job, my dad said to me, in exact words, "Oh my God, you're one of these idiots." So and the reason is my dad ran a manufacturing company and would get called by like, small, really small company, but got called by some of the small private equity funds. And what he told me is like, you need to figure out how to add value or you look like everybody else. And I get on the phone and people would be like, well, how can you help? And look, I'd be like, Bessemer's a world-class firm, been around for 100 years, backed all these great entrepreneurs. And when I decided to leave and then go out on my own, I ended up actually working for a hedge fund and then spun out of there a few years later. When I created my own firm, I was like, well, how do I add value? Like, how do I be truly different? How do I look different than Insight, Sequoia, Excel, Bessemer, TCV, Warburg Pincus, like you name them, Summit? And some of these guys go earlier, some of these guys go later, but like, how do I look truly different? What I would do at Bessemer was like connect CEOs together. So I'd be like, hey, you're the CEO of a $50 million software company in Madison, Wisconsin. I talked to another $40 million revenue company in Milwaukee. I'd be like, hey, I'm not invested in either of you guys. You guys should just like know each other because you probably have the same types of like growing pains. So what I also thought about was like customers. They'd be like, hey, you sell e-commerce software, you've gone from 0 to 100 million of revenue, and you're the CEO of Net-a-Porter, and you're the CEO of Ukes, and you're the CEO of CSN stores, which became Wayfair. You guys like should know each other. So that was just like connect CEOs together. So when I started my own firm, I was like, if I'd been the global head of HR at Dell, I would have gotten the head of HR at Pepsi, American Express, and Coke around. And if I had called into Workday really early on when it was 10 million in revenues and said, hey, I can introduce you to all these like global heads of HR who buy Workday, they would have been like, sure, like come on and invest because you'll drive customers. The dilution will be worth it because you'll drive revenue for us.
Mm-hmm.
Yeah, when I started a firm, I didn't have any of that and still don't. And so I was like, what is going to be our differentiation? And it was, I'm going to go find world-class execs who want to invest with us. And in exchange, I will say, listen, we're going to run around. We're going to be focused on very specific types of companies. We'll talk about them. We call them the Lead Edge 8. They were the Lead Edge 6 when we launched 15 years ago. And when we find the companies, we're going to use you to help source them. We're going to use you for diligence. We're going to use you the whole way on, customer intros, recruiting intros. But we're going to find them and you're going to just help. And we found a lot of people that like want to be involved in that. And it takes active engagement. You know, we have 15 events a year. We have a New York dinner in a few weeks where 200 people will show up. We do a quarterly call each quarter on our, walking through people through their portfolio versus if you invest to the Goldman Sachs RIA or a multifamily office, like you probably don't know anything about these companies or the fund. You know the name of the fund you're in, but you don't know the underlying positions. We say, no, listen, we're going to take an active approach. We're going to tell you what you own. In exchange for transparency, we want help. So that's how we built this thing.
That's brilliant. And so that's markedly different than most firms. I mean, do you have also institutional investors?
Yeah. So we have some amazing institutions that have invested behind us, some big state pension funds. That's obviously some big consultants, some of the world's best endowments that there's no way in possibility I ever would have gotten into the schools that invested in our firm. But yeah, we do. But by number, 95% of our LPs are individuals.
Mm-hmm. Now, you went into starting your own firm relatively early, meaning you graduate undergrad in 03, if I have these numbers correct, and you start Lead Edge in 09. Did you always have this kind of desire to start your own thing? And you were just kind of like, kind of learning along the way as you were working at these other institutions?
Yeah, yes, but I also got lucky. So I've always been an entrepreneur. I started a company in college. I dropped out of school. Then horrible circumstance, the World Trade Center goes down. I'm like, well, I got to raise money. Well, that's not happening. I then graduate school in 03. The economy sucked. So, then graduate business school in 09. Economy sucks. So after Bessemer, I went to work for this small hedge fund underneath the Julian Robertson Tiger umbrella. And that hedge fund, put me in business. And like I did a couple deals there and then ended up spinning out of the hedge fund and buying the assets out of the hedge fund and raising capital into them. And look, the first deal we did was Bizarre Voice. His CEO, Brett Hurt, he had been a repeat entrepreneur. He sold Core Metrics to IBM for a bunch of money. And that was a company I used to cold call at Bessemer. We never got in at Bessemer. But I stayed in touch with him. He was a Wharton grad. And when I was working for the hedge fund while I was in school, I went to him and pitched him on, I think I can help you a bunch. I helped you a bunch when I was at Bessemer. Like, can I get a piece of this deal? So when I was at the hedge fund in 08, we ended up making an investment, and then I bought it out of the hedge fund in 09 and bought some more stock. And we like to joke I was the cap table janitor and just kept buying up little positions and raised the money from people that were wealthy, that entrepreneurs I had cold called, and people had rich parents in my business school class. And every quarter I'd share the financials and be like, hey, Bizarre Voice needs an intro. And this is like 09, 2010, like needs an intro from to these these companies. Anybody know people? And then people would be like, oh, the company's doing really well. I see you made an intro. Like, if you find more stock, let me tell you. And some of these people were successful entrepreneurs, would introduce me to their successful entrepreneurs' friends. And then after I did a couple SPVs, a bunch of my LPs were like, look, we're in all these funds. Nobody ever asks us for help. We don't get these emails. So GA or Insight or TA or Summit or Excel aren't sending emails to their LPs asking for customer intros. We were. So after I did this second deal, a bunch of my LPs said, look, we'll back you to start a fund. And so in 2011, we raised our first $52 million fund. And we're still invested in the same stuff today as we were then. The only difference is back then we were weaseling our way into deals, and now we're leading deals. But like, if it wasn't for Brett Hurt and the entire team at Bizarre Voice, which was a great, first return, exit for us that we sold when IPO'd, I wouldn't be here today. Like, if that company had failed, like, we wouldn't be here.
So I'm hearing two things. Like, one is that you have great entrepreneurial instinct, and the second is you've got great investment judgment. Do you think I'm accurate in that?
I have an ability to hire really good people that are really good investors. Like, obviously, I made the first investment in Bizarre Voice. Like, it was me, but I didn't know. I mean, we have a team of 75 people now, and I'll really credit my partners, Brian and Ime, that have been here since Fund One. It's been the same IC since Fund One investment committee. No, I mean, they're like, my partner Nime is like one of the smartest people I've ever met. Like, he could be half asleep and he'd be smarter than Brian and I combined. I'll out hustle anybody on the planet. I will outwork anybody. I've had ADD since I'm a little kid. I've always struggled with it, but I will outwork anybody out there. There's like, we work 24 hours a day, 7 days a week. I don't care if you're on vacation. Like, we were back in the office in August of 2020, the entire firm. Like, we work for our LPs and our portfolio companies. People entrust us with money, and we tell companies that we will help them. And if we don't help you, it'll be the last good company we ever invest in. Because, like, you spend your life like building a reputation, and it takes one deal to blow it up. And so what the partners here, Brian, Neiman, and I, the senior partners, spend the most time on is, how do you keep the culture when you have 75 people going to 100 people the same as it was when there was 3 of us?
Yeah, I was going to lead into that. In one of the videos I watched, the CEO said it's just a different vibe at Lead Edge. And that caught my attention because it was the way he said it where you kind of really felt it. And so what is that vibe? Is that vibe coming from you? Is it coming from everyone else?
It's the 3 of us who run the firm. It's like, we have 4 tenets at Lead Edge, like 3 or 4 things we want people to remember. We have been fortunate to have returns that are good. Returns, transparency, like, be transparent with people. Give them information, good, bad, the ugly. Give them bad information first. Help. When you say you're going to do something, actually do it. And like, and lastly is just like, engage people. Like, we do like 15 LP events a year. We invite, literally, they're like social events. We have some portfolio companies speak. We have all the partners will speak. We'll bring junior people to like, because people want to meet the entire team. And I would say a really core tenet of Lead Edge is engagement by all. So I don't care if you're smart enough to get a job here, which I certainly would not be anymore. Actually, my GPA would be under the cutoff, so I couldn't even get a job at Lead Edge anymore. If you're smart enough to come and work here, if you speak to a company and you've been here 6 months, or you're in Seattle, like, it's almost the culture of like, if you're in Seattle on vacation, the best way to get a trip paid for is offer to Mitchell or one of these partners to go meet an LP that lives in Seattle. Because like, if you can get a job here, you can represent Lead Edge in front of anybody. It's not like, a lot of these firms, if you're a junior person at one of these big firms, like, you don't know any of the limited partners. You have no clue who they are. And we're just like the complete and utter opposite.
Right. Now, do you see, certain characteristics, like when you're meeting someone, that immediately it triggers in your mind, this would be a great person for Lead Edge. We'd love to hire them.
They'll like run through walls. Like, so we have, I don't know, 18 to 20, 22 to 24-year-olds that like pound the phones and emails. Actually, I'm trying to encourage them to pound the phones again, because nobody leaves voicemails anymore. Like, when's the last time you got like a voicemail? So we screen a lot when we screen for young people. You're looking for persistent, smart, thoughtful people that are really inquisitive and creative. So like, it's almost like investigative journalism with a sales angle, because they're trying to get information out of CEOs. And then, but then you gotta be smart enough to present it to an investment committee and actually work on it to figure out if it's a good deal or not, or a bad deal. Most companies are not going to be a fit. We find athletes are very good. If you can have a 3.6 and be on the Stanford football team, or the, Princeton, soccer team, or the university, if you're the quarterback at UT, like, and by the way, that means you work 2 full-time jobs. I'm sorry, but if you drop the football in the Rose Bowl, that's actually failing. Like, not getting a C on a test in chemistry your sophomore year, like, that's not failing. That's not like failing at life. And so we're looking for people that are like insanely persistent and like know how to work towards like a singly focused goal. I think that's like super important to us. And persistence, like people that write us handwritten thank you notes, people that follow up like 10 times. It's like little stuff like that.
Hmm. Now, aside from it helping you get into Williams, what are other things that skiing helped you develop? What attributes, what characteristics?
So the guy that hired me when I was at one of the Tiger Cubs, I was like, why'd you hire me? He's like, oh, simple. If you can ski down the hill at 70 miles an hour, investing in the stock market when it's down 20% can't be that scary. Like, you understand risk reward really well. And it's also like, it's no different than if you were a world-class lacrosse player or a world-class tennis player or built a software company in college or built a restaurant chain in college or did anything. It's just knowing how to work extremely, extremely hard in a very focused way towards a goal and being persistent. So if you think about a lot of people that graduate from like an Ivy League school, and we hear people from Ivy Leagues, we hear people from non-Ivy Leagues, but a lot of people apply to 5 schools, they get into one, they go to their career counseling office sophomore year, junior year, get an internship at one of the 5 investment banks or one of the 3 consulting firms. Then in a few years after that, they call the 3 recruiters or the 5 recruiters that help them get jobs at hedge funds or private equity funds. They do that for 2 or 3 years. They then apply to 5 schools and apply to 5 business schools. They've never done anything like that's. They've never like gone out and actually looked for a job or like. And so we're trying to find people that have like been persistent and like and know how to like get stuff done.
Hmm. Now, at this stage, you've built the firm up, you've got a lot of people in the lead edge ecosystem. What's kind of that next big goal for you? Like, what keeps you kind of motivated? Like, if we can get to this point,
We're
within
trying to
three.
build the next TA or General Atlantic. Like that's or Spectrum Equity. That's what we're trying to do. Like world-class investors who have built like world-class institutions that if you call entrepreneurs around the world, they're like, yeah, I know those guys. Those guys are like really good.
Mhm. What are your current challenges now that you're most focused on in order to kind of propel you forward
It's continuing to build a team and processes and scaling an organization. No different if you build a software company or a media company or a restaurant chain, whatever, right? For the first 7 years of Lead Edge, up until like even longer than that, people doing deals were the 3 senior partners. We didn't have like a formal investment committee on Monday meetings. Like we had investment committees sometimes on Saturday nights at 10 o'clock at night. Like it was just like, hey, the investment was done. You guys want to read it? Let's talk for an hour. And we would talk to each other 50 times a day. It's funny. I moved to Santa Barbara in 2015, and I was very concerned about losing touch with my 2 partners. Now we have 10 or 12 people out here. And it's like every year we inherit one because it's the winter's cold in New York and warm here. And so we literally put television screens in each of the 3 partners' offices and never turned the conferencing off. It was like live feed television, and we just like mute each other. If I was on like a call, it would have been like a screen on the right side of the room with that on. That was like the extreme. And so now we had to put processes in place because there's other people that are doing deals. And it's like, listen, you got to submit your memo by 5 o'clock on Thursday. The memo needs to then be distributed to IC by the next morning. The questions need to be in by IC by Saturday at 7 p.m. We discuss it then for 2 hours on Monday morning. Everybody at VP and up gets included. We have an operating partner call. We have a marketing call. We have a public markets call. Like my whole Mondays are calls now. Internal calls. It's just building processes. And look, the 3 of us who run the firm I tell every person that's principal or above, like, you want any of my deals, please take them all. Like, I will help you win a deal. I do not need deal attribution for my resume. That's not, it's like, if we lose a deal and you didn't include me or include some of the other guys in the team who could help you win the deal, then shame on you. Like it's not, I'm not mad at you. I'm mad at myself because I didn't communicate it. Brian and Nime, we didn't communicate it to the rest of the firm correctly. But it's
and,
truly like we win and lose the team.
and the decision to move out to Santa Barbara, I mean, it's a wonderful place. Was that the reason why? It's like, that's where I want to live.
That's where my wife wanted to live. We like living here. I live a mile from work. I live a mile from my kids' school. I can leave work for an hour and go for a bike ride and climb 2,000 feet. Like I can go for a walk in the ocean. I like living here. It's funny. None of the executives had any issues with it at all. Because like these people know they've worked everywhere, right? And worked and travel. And if you're in a hotel room in Chicago and you're from New York, you're still working. Some of the one of the institutions was like completely perplexed that, you could just run a second or third office. And then I called them during COVID. I'm like, so how's it working? Totally fine. And they're like, well, but at home, I'm like, no, that's why I didn't work from home. I had an office. You can work from anywhere. A lazy employee at home is a lazy employee at work. You could do the job of an analyst on the beach in Kauai at LeadEdge just as well. You just wouldn't learn. It's like what the value of the analyst is being in the office, hearing partners like yell about a deal or, like talk to each other. And that's like, it's like learning through osmosis. It's not actually doing the job as a young person. You can do it anywhere in the world.
What areas of technology are you most interested in?
So we do not pontificate at all on sectors, but we have these like 8 criteria. And so these 8 criteria are like the LeadEdge 8. And we speak to about 8,000 companies a year. We're trying to find companies that the LeadEdge 8. When you call 8,000 companies a year, 1% would meet all 80 companies. That would obviously be too small a pond to do 5 to 7 deals in. And so we're looking for companies that, meet 5 to 7, 5 or more of these deals, which is about like a 10% yield. Are you 10 million plus in revenue? Are you growing 25% plus a year? Do you have 70+% gross margins? Are you capital efficient? This is like our dumb version of return on equity. Have you burned less than you have in revenue? The world is littered with $80 million companies that are 20 million in revenue that have burned 80 million, 100 million to get there. I want the $20 million company that's burned $3 million to get there. That's growing 40% a year. Capital efficiency. We're looking for a 1-to-1 ratio or better. Do you have 90+% gross retention? Do you have any customer over 10% of sales? Do you, are you recurring revenue? Are you profitable? And again, call 8,000 companies, about 800 meet 5 or more criteria. We'll do diligence on 150 to 175 to do 5 to 7 deals a year. But what's awesome is there's no pontificating allowed at LeadEdge. Hey, don't tell me you think this is a great company. Like, how many criteria does it meet? Instacart met 3. I don't need to spend a lot of time focused on it. It's fine. It's just not what we do. We would have missed Amazon. Like, that's fine. It's just focus on these types of companies. That leads us to invest in software, internet, tech-enabled services. Across software, we like vertical applications, developer tools, security, compliance, internet marketplaces, and tech-enabled services. It's like managed services, business process outsourcing. We love information services businesses. So yeah, that type of thing.
Final 2 questions. One is, can you tell us about a person who has had a profound influence on you?
My dad, for sure, 100% my dad. He was the one that told me to add value to these knucklehead calling people.
That was key.
So that was key. Most important thing. I mean, literally, he said, "You're one of these idiots."
No offense to others out there. Last question. Can you tell us about a charity cause or other endeavor that you're passionate about?
So one, I'm on the board of the U.S. ski team. I love to give back to that. And I actually try to recruit some of these athletes when they get done ski racing to, come work at LeadEdge. We're actively working on a couple people. And then my wife and I, mainly driven by my wife, are really interested in art and arts and like enabling. So I'm talking to a museum that's within 100 miles, 200 miles of where I live. And I think most people in the town don't go into the museum. And the reason is the museum is the same thing today as it was 50 years ago. But like the world has changed. Like you can offer like immersive art or, a different experience. I think that's why the Japanese contemporary artist Kusama, who's probably the most famous living or dead female artist, like you'll see lines down the blocks. Her art can sell for millions and not tens of millions of dollars, like the original stuff. But they'll do like installations with mirrors and all kinds of things, and the line will be 2 blocks long in New York City. And it's just because it's different. It's not just a Picasso or a Monet or a Van Gogh sitting on the wall. And so my wife and I are really interested in how you can use art, like show art, to a wider swath of people.
Fantastic. Well, Mitchell, I want to thank you again for taking the time. This has been a wonderful conversation.
Sure. Thanks so much. Cheers.